This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
A ceasefire between the United States and Iran appeared in jeopardy on Monday after the U.S. said it had seized an Iranian cargo ship that tried to run its blockade, and Tehran vowed to retaliate, refusing for now to join new peace talks. Iranian Foreign Ministry spokesman Esmail Baghaei said Washington has shown it was not serious about pursuing the diplomatic process and Tehran would not change its clearly stated demands, adding that it did not believe in deadlines or ultimatums when safeguarding national interests. The U.S. had hoped to start negotiations in Pakistan shortly before the two-week ceasefire expires, with sweeping security preparations underway in Islamabad, but Baghaei said the U.S. was insisting on some unreasonable and unrealistic positions.
Oil prices jumped around 5% in early Monday, trading on fears that the ceasefire between the United States and Iran could collapse after the U.S. seized an Iranian cargo ship and traffic through the Strait of Hormuz remained largely halted. Brent crude futures advanced $4.19, or 4.6%, to $94.57 a barrel by 10:27 GMT, and U.S. West Texas Intermediate was up $4.60, or 5.5%, at $88.45. Both contracts tumbled by 9% on Friday, their largest daily decline since April 18, after Iran said that passage for all commercial vessels through the Strait of Hormuz was open for the remainder of the ceasefire.
Moving on to the top news in the energy sector.
China is curtailing refined fuel exports rather than banning them, with countries including Malaysia and Australia receiving supplies even after Beijing extended last month's restriction into April, according to shipping data and traders. The export cut has been deeper in April than it was in March, according to tanker tracker Vortexa, with shipments of diesel, jet fuel and gasoline to destinations other than Hong Kong totaling 320,000 metric tons in the first 2 weeks of this month, just a sixth of year-earlier levels. China's April shipments have included 234,000 tons combined to Vietnam, Indonesia, Malaysia, Australia and the Philippines, plus 82,000 tons to South Asia via Singapore, Vortexa data showed.
Shipping traffic through the Strait of Hormuz remained at a virtual standstill on Monday, with just 3 crossings in the space of 12 hours, according to shipping data. The oil products tanker Nero, which is under British sanctions for Russian oil activities, left the Gulf and was sailing through the strait, according to satellite analysis from data analytics specialists SynMax and tracking data from the Kepler platform. 2 other ships, a chemical tanker and a liquefied petroleum gas (LPG) tanker, sailed into the Gulf through the critical waterway separately on Monday, the data showed. Next, we have the top news in metal markets. China's exports of rare earth magnets in March slipped 1.6% from a year earlier but climbed 10.5% month-on-month, customs data showed on Monday. Outbound shipments from China, the world's largest producer of rare earth magnets, were 5,238 metric tons last month, data from the General Administration of Customs showed. Exports to the U.S. in March fell for a 5th consecutive month, down 9.5% from February to a 9-month low of 406 tons, and were 30.6% lower than a year earlier.
Gold demand during one of India's key buying festivals stayed muted on Sunday as record prices curbed jewelry purchases, offsetting a modest uptick in investment demand. Indians celebrated Akshaya Tritiya, the second biggest gold buying festival after Dhanteras, when purchasing precious metals is considered auspicious. The sharp rally in prices curbed jewelry demand. In volume terms, buying was lower as consumers held back, though in value terms spending was higher due to elevated prices, said Amit Modak, chief executive of P.N. Gadgil & Sons, a Pune-based jeweler.
We will now look at the top news in the agricultural sector.
China is expected to import fewer soybeans, pork, beef and dairy products in 2026, with volumes projected to fall 6.1%, 8.2%, 3.9% and 4.1%, respectively, from a year earlier, according to an Agriculture Ministry-backed outlook released on Monday. Overall agricultural product prices are likely to remain stable, with most commodities expected to hold steady initially before rising later in the year, the China Agricultural Outlook 2026 to 2035 report said. Grain output is forecast to reach 733 million metric tons by 2030 and rise further to 753 million tons by 2035, the report said, up 2.5% and 5.3% from a record harvest of 715 million tons in 2025.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.